So hello active traders and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your humble host, coming at you live from Colorado in the US of A. As always, all information is for educational use only, not making advice or recommendations about what to buy, sell, or hold, and not making income or performance claims of any kind. Just a quick reminder, from now till next Saturday, you can save 40% off any of my downloadable courses. And they're really good. They're not BS courses. They're honest courses. And I used to be a corporate training and development expert for companies like Ford and Rockwell and McDonnell Douglas and Sheraton and Chevron, and hired by a lot of companies. And so I've got an expert background in adult learning theory and a lot of millions of dollars worth of real trading experience under my belt. And my courses are really cheap, as low as $27 or $97 or $197. They're really inexpensive for hours of training. So you can save 40% off if you use the coupon code in my Shopify account. The Save40 is the coupon code. And you can get to the list of the courses at www.tradingvideos.com. We've got dozens of courses, thousands of customers of you guys. I appreciate it. Let me show you one last peek here at the course listing. I haven't put these on sale for many months, 5 or 6 months, so now's a good time to buy. Things like trade mapping, the inverse ETFs, how to trade gaps, tape reading courses, and much more. So, and they're all cheap, right? They're all inexpensive. And they're downloadable high-resolution videos, not streaming fuzzy, overpriced crap like my competitors sell. So anyway, back to it. Let's get on with our market. We'll start off with a look at the S&P, then kind of hone in our VIX and see what's going on. With the market in a 2-day decline based on coronavirus and Bernie fears, we'll see if the market next week, the line in the sand first initially is going to be, do we drop and touch the 50 SMA near the 3285, or do we pivot off of it like we did last time? Your expectation and mine is that the market's likely to slow down at least, or pivot somewhere near the 50 SMA because it did so last time, and it has done so frequently over the past year or so. So we expect that, if you're, whether you're buying puts in the S&P or you're buying calls in the VIX, if you're an options trader, or if like me, you're trading the inverse instruments or going short in the market, tighten up trailing cover stops or exits if the S&P gets near the 3285, 3290 region. Next supports the 100 simple moving average at 3180. A good question from a trader: how do we know that we may get some strong selling pressure? The answer is not a loss of the 50 SMA. That's a little tight. A loss and hold under the 100 is an intermediate sign that the market's extremely weak. But the main line in the sand that all the professional traders I know we're all looking at is the 200 SMA on the annual. That's way down here at the 3050. So see, we often see congestion and bounces near the tighter simple moving averages, right? We got a hammer here. Got a reversal here. The question is, does S&P lose the 50 SMA and hold underneath it? If it does start to watch out below, we'd want to see it lose this support line here at the 3200 and here and there. And of course, obviously, if it recovers and keeps going up over 3400 and holds for at least 2 or 3 days, minimum of 2 days, then we may have a bull recovery. I'm not counting on it, though. I think the markets may well be due for a beatdown. So let's take a look at our analysis. And again, I apologize in advance. I'm not going to have time to answer a lot of questions now that you guys are all posting, because I've got swing scans coming up in just a few minutes for my paid members. Anyway, the VIX is up here right under 18. The fact that it broke up and held above all 3 moving average lines, kind of a crack in the foundation. Market's starting to show some signs of weakness. Now, unless or until the VIX gets north of 20, right, which is the previous high, we're still in an indeterminate region. So one of the things you want to do as a professional trader or a home retail trader trying to hustle some money out of the stock market is keep a keen eye on what the VIX is doing next week and see if we get a buy in our VIX ETNs, or if we get a reversal in the market. Epic fail. So what you want to do is at least what I'm going to do is continue to scale into my inverse instruments if the VIX stays over the 15, right? Because that's the 200 SMA right there. So we're starting to recover, but it's still insignificant. Well, slightly significant, but it's insignificant unless the VIX pops and breaks the 20. That's what all the pro traders I know are looking at, myself included, right? So I'm going to keep an eye on volatility index very carefully next week as well. In terms of sector strength, if you look at sectors, you can see we're starting to see the epic fail in the semiconductors, currently at the 50 SMA. We'll see if that selling pressure continues on China supply chain manufacturing concerns and capacity and throughput and supply base challenges. Pharmaceuticals and biotechs are also underwater under the 50 SMA. In terms of hot charts, what's going on? I like work except for the fact that it's up here near the 30 and we printed 4 red candles. But if it breaks north of 30, it's been in a good strong 45-degree angle directional uptrend. I mentioned it to you guys last week. Congratulations if you took it. Booyah. But it's a good time to sell because it's right under the 30. Tesla, what a nut that one's been, right? It's all over the place. I called it short live at 9:54. Here we're it's a brilliant short call in the afternoon free sessions I was doing. When it was up here like 9:62, I said, hit it short at, not a trade recommendation, but a chart pattern reversal that I was teaching. I said a short under 9:54 would be indicated. And I promptly dropped 50 points. That was my best short call in my life. It was a 50-point winner, paper trading or whatever, the Tesla dropped. Live, I said short the 9:54, and that was a great call. So Tesla, good time to take profit if it drops under the 860, right? Always use the loss of a 2-day support line. Kind of like my green, yellow, red strategy. You're looking at a 2-day basis. You start to scale out of your swing trades if you lose the previous day's low. The current and previous day's low. A 2-day aggregate low / 2 red candle reversals. A good time to go to cash. What I do is I martingale in and out of my trades all the time. I'm a poker player too, and I know how to put my game on. So if I were in, say 100 shares, I'd sell 50 of the 100 and a first loss of support, and then sell 25 on another loss, and then sell the remaining 25 if it keeps going down. And to build into a position, let's say I'm looking at, one of my swing scans picks for the week for my members is Newmont. As one of my smart traders, Mira, said she had sold at near 49 here, whatever, yesterday or something. And that's a brilliant exit because I always teach sell the nines, because it's a very smart strategy, particularly when you have a sharp run up and something runs up to right under a multiple of 10 price like a 9. That's a smart exit. Now it may gap up to 51. You miss out on the profit potential there. But as a rule of thumb, if you're fortunate enough to have a swing trade run up to something with a 9 in it, that's a good place to stick a fork in it and sell it. You can always rebuy if it breaks out over 50. And I'll likely trade it myself if it breaks the 50 and continues on up. The specific price action trigger is in the Swing Scans members area. For all of you who are Swing Scans or All Access members, I posted that this morning. But anyway, gold's up. I sold my nugget yesterday because, again, it's getting close to the 9, and it was looking a little rich up here, so I sold it here. Now, this is still an uptrending chart. It's got an ascending triangle, right? So it's still a long bias chart, but the trick in trading is, like I teach, when in doubt, get out. Or when you're nicely in the money, get out. Take the money and run, and then rebuild the trade if it does continue on up. Knowing the difference between when a trade, like a fruit that's ripe, is a really good example that I came up with. Like I eat a banana a day and walnuts because I'm trying to be healthy, and protein stuff. Anyway, if the fruit is ripe, if there's brown spots on the banana, price action has gone up very sharply up to a key resistance area. You're supposed to sell there, or at least tighten up a trailing stop, which I did, and it took it out on the drop there, and I cashed in. Boom. I was in from like 29 or something and sold the 38. So I'm sorry, I was in from right over 30 because I don't buy nines, right over the 30, and I sold yesterday there. And that was a good round trip. I shall rebuy nugget if it keeps going up over 40. For more on coverage of gold instruments, be sure to be in my live trading room because we cover that and other instruments, of course, at tradingtheopen.com. But anyway, gold's been on a tear, so 7-year high in gold. Money needs a home, right? So like a shell game, when there's concern about the equity markets due to Democratic Socialist president, hopefully it's a remote possibility and doesn't happen, or coronavirus spread also, which we don't want to happen, of course. But with those headwinds out there likely impacting second quarter earnings across the board, particularly in momentum growth stocks or FANG stocks and other ones that are sensitive to pullbacks and are trading at large multiples, well over 20 multiples, it's a good time to roll out of equities and into defensive plays, whether that's bonds or gold or other things like inverse instruments like I trade that go up when the market drops. Or for those of your options traders, whether you're buying puts in the S&P or calls in the VIX to play the short bear market, that's what you do. Make sure that if you're trading weekly options in the S&P, you don't have to wait until options expiration to cash it out. Get out at the first sign of trouble because we're still in an uptrending market. So exit early. And the same thing for equities and ETNs. There's so much to cover and so little time. Anyway, PIN was something I mentioned last week, still on the radar. Bearish engulfing here, kind of warning. So we want to wait for it to break north of 40. A PENN has a pretty good uptrend, so you might want to keep an eye on that one. A couple others that I'd mentioned last week include CC. Kind of an okay bounce, right? It's alive. We'll see if it breaks north of 20.5 next week. It's in an uptrend in a downtrending market. If you do play stocks to the long side, particularly for swing trades, make sure that they have high volume breakouts, right? So, if this guy starts to go up, for example, I'd want to see volume of at least 30% above the average volume. So up at say 6 million, 7 million or so on the day of or before the entry. Not at the volume, if however the volume is down flat near 3-4 million shares and it takes out new price action highs, we stay clear. We don't take it. And how many times have you gotten into a false breakout? Well, if like me, it's been a few 10,000s of times. You learn the hard way. Make sure you have volume confirmation. Make sure that your timing is right. Make sure that you're getting expert guidance from myself in my live room at Trading the Open, and not from these people that just talk about charts and don't trade and the rest of it. This is RDFN, and it's a pretty good one. One of my traders had mentioned it yesterday, and a lot of smart traders in the room too. Oftentimes, my traders, having been trained by me for what to look for, come up with better charts than I do. And that's great. I love to see that, right? It's so gratifying as an educator to see people do as good or better than you do in their trades or their chart picks and whatnot. So anyway, it's a great community of active traders, at Trading the Open. So anyway, we'll see what's going to happen. The S&P is dropping. Like I say, this I screen capped this morning out of my Fidelity account. Let me ask you, wow, big turnout today. How many of you are trading inverse instruments like SOXS or SQs? I really, really like SQQQ. I think I would have to say that's like tied for first place along with TVIX, or even actually from I won't say safety because all of these are risky, but SQQQ is probably the best of the bunch because of the upside potential. But how many of you guys are thinking about or trading these? Right, Jim, about the puts. Right, birthdays. You're right, Brian. Yeah, you're right. Yeah, Greg had mentioned the 30 years at its lowest ever. Yeah, I'm a big fan of watching CNBC on YouTube, right? I do every single day. I always like watching old Jim Cramer. Jimmy Chill, right? He was a smart guy. Always entertaining. His job's not just to entertain and inform, but to teach you how to trade. His mission's to make you money, as is mine, right? So he's one of the good guys, and the Fast Money team is always smart. I like Guy Adami, right? He's always talking about the VIX. And anyway, pay attention to what everyone else in the world's paying attention to, at least, 10 minutes, 20 minutes a day by watching some of the CNBC YouTube videos. Highly recommend. Okay, good, Stephen, Amira, and Phil, and Eric, and Ken, and Jurgen, and Byron, and Vincenzo. Hey, Vincenzo, how you doing, man? Jurgen saying you can't get TVIX on your platform. Is there a similar one? Well, any of those 5 are good. I'm underwater in my SPXS. That doesn't have as good leverage. That's kind of I'm likely to stick a fork in that, cash that one out and rotate the capital into the S triple Qs. I mean, it's only $1,000, but still. S triple Q, SQQQ is the single, I think, best potential way to trade a bear market. And I teach how every day in my live trading room. We have both day and swing trading calls for the inverses. So, hey Ken, how you doing? Another Ken. Eric's SQs and UVXY. Yeah, those are the 2 best. And think about SOXS too. If I had to pick 3, those would be the S triple Q, UVXY is good, and the semiconductor short, SOXS. Right? Look at the 1-year chart on anything that I'm long and in the money in, right? So the problem with SPXS is it doesn't have as much leverage as, say, S triple Q. So I'm likely to use a tight trailing stop. And my SPXS is in the red anyway. I'm underwater by $50 in that one. I'm still up net profit $870 in the account as of this morning. But that one's the total gain loss is underwater 50. And the leverage isn't that good. So I'm likely to say, you're fired, right? See, I like charts and I like stocks and I like ETFs and ETNs that make me money. Things that lose me money, I don't like. I like what puts money in my account, right? So if anything's misbehaving, I tighten up a trailing stop and let the random market noise take out the position and then rotate the capital into something that is making me money. So I always want to look at capital rotation, much like institutional traders use what's called sector rotation. As a smart active swing or day trader, you want to be playing the charts that have the best profit potential and do well, like I am in these guys. So SPXS, no, but SQs, UVXY, SOXS, all really good. And Wendy's asking what exactly is S? It's just the 3X bear Qs. The triple leverage, I think it's triple leverage. It's a leveraged inverse Q. So the triple Q tracks the NASDAQ, right? The S triple Q also does, but it's the bearish opposite of the Qs, right? So if you look at the Qs chart and the SQs, you'll see their mirror image is the opposite. All right, well, I think that's about it. Yeah, and Mira said she sold the Newmont at 49.50. Good for you. That's good. That's smart because that's right under the 50. Because we are kind of suspicious of it being able to clear the 50. And it may, but frequently selling right under decade values with 9s is the right way to exit the trade. Because next thing you know, it may do a mean reversion pullback, right, to like 44, 45. So sure thing, Wendy. All right. Well, gang, I've got to run. Just a reminder, I do have 40% off all my courses. And they're as cheap as $27. So you have no reason, if you find value in these broadcasts, I would appreciate some reciprocity and honesty and invest a little bit in some of my courses, right? I'm not a big, if you don't buy any of my stuff, you're kind of like a socialist, Bernie, Elizabeth, who are the other morons? Bernie, Elizabeth, I don't even know their names. It's like a comedy show, right? It's like a clown show. But anyway, if you're a socialist, then don't buy any of my courses. But if you believe in rewarding hard work and giving yourself an edge with professional training, then pick up one of my courses. And like I said, proceeds of all sales this week are going to my daughter's college education. She's a straight A student, honor student here at University of Colorado. In her second year, she's a sophomore already. Such a cliche, isn't it? For those of you who have kids, it's not like it was just yesterday when I remember seeing her in the delivery room, but it doesn't seem like it's been 2 decades, right? But she was born 20 years ago, and very proud of her. Of course, I talked her into getting a business degree, but she likes chemistry and bio. Go figure. I hated chemistry and bio, but she likes it. But she said her professors are really good, and one of her business professors was a Wall Street guy at Goldman Sachs or something, and now he's teaching at college. So it's great. She's got Wall Street type people in her business program here locally. So anyway, 100% of all proceeds from all course sales this week, if you have my word, go directly to her college education. So, and she's working a part-time job and she helps me in the business too. So she does work. It's not like a handout or anything. So I do appreciate it. And also the courses, unlike competitors' courses, virtually all of them have video previews. So you can get a sneak peek of what's covered or some actual footage from the course. They're high resolution. Everything from tape reading to swing trading and day trading entries and exits and how to trade gaps. And so they're bestsellers. I've sold so many thousands of courses, millions of dollars worth over the last 20 years because people like them. So I appreciate it. You can see quite a few thousand testimonials from traders across all the sites I've got. So anyway, any other questions? I got to wrap. Oh, thanks, Mukesh. Good to hear it. Do engineering and business will seem easy. You're right, Jim. Well, I used to work in the electronics engineering ELD department of Ford Motor Company. And my father's electronics, he's retired now, but he was an electronics engineer. So my mom was a child psychologist, is a child. She's alive, but in her career, she'd been a child psychologist. So I'm the product of an engineer and a psychologist. And myself, I was a statistician and quality engineer at Ford Motor Company. And you're right, engineering is much more challenging, like the STEM programs, right? Science, technology, engineering, and math, much more challenging than basic business because of the math and the numbers, right? And the parameters and the relationships and the calculus and all that kind of stuff. I actually didn't hate calculus, but I hated chemistry. I still have, I'll say nightmares about, but I still have really bad memories about organic chemistry at UCLA. I was pre-med and I washed out of the pre-med program because my GPA wasn't good enough. I was getting B's and C's in my science classes because they grade on a curve, and there's a lot of people that spent their lives in libraries, and I had a hard time relating to abstract things like pi back bonding and electron orbits and all that crap. So I like money and I like people. So hey, Srini, I appreciate it. Srinith, I appreciate it. All the best and good luck to your daughter. You'll buy some courses. I have 2 daughters, both now married and doing good, right? Chemistry is the future. Yeah, I wish I liked chemistry. Thanks, Mary. Yeah, I know. Yeah, I appreciate you getting courses there. They help. Hey, Jim Sandin got me involved with interactive brokers for trading. Good to hear it. Right, Jurgen. Yeah, Russia supports Bernie. Read it today. Yeah, I saw a YouTube video. And Jim says he likes all the courses they've purchased. Appreciate it. Phil saying I want to be a contrarian and buy one close to the money call on the inverse just in case of big fake out. Hey, Brian, seen the Swing Sand webinar too? Yeah, I got to run. Okay. Yeah, Frenchie, I got your email. I can't switch subscriptions from Trading the Open to Swing Scans. I did cancel the Trading the Open. If you want to switch over to Swing Scans, you got to register separately for that because PayPal, you know, they have individual subscriptions and they don't let you change it from one to the other. So if you want to try it, let me know and I'll follow up. But I did answer your support ticket last night. I think that's it. Hey, traders, good to hear it. All right, well, I'm out. I got Swing Sands coming up in just a minute with even better charts for my members. So do give some thought to the courses. Start off small, you know, with a $27 or $97 course at 40% off. They're very affordable. I think you'll be impressed, like so many other. Look at the testimonials and see what other traders say. That's my best way to convince you they're worth getting is look at what other people say, right? So anyway, take care, and I will see you guys next time. And do well next week. Remember, play things tight. Play it safe. Market's in a indeterminate pullback region right now, so we don't want to. I'm not going to be buying equities. I'll be buying some gold, and I'll buy more inverse ETFs if the market drops. That's what I'm going to do. So anyway, take care, and best wishes for success. I've got to close.